Good afternoon, all. Camelback Trading 2724 and the pitfuturestrading.com. Coming to you this Tuesday afternoon, March 17th. We're looking at the last 4 days of the market profile here on the SPY ETF. And although a good day for the bulls, bottom line is this. We're still one-time framing down. I'll call it down to balance. A very big silver lining today, though, is we did take out yesterday's low, and there was absolutely nothing below yesterday's low to get to 2018's low, and we took it out and came right back into range and never saw it again. After four time frames of trying to figure out what the market wanted to do, we never even saw the opening again except in H period. We end up 10 wide. We have a range of over $19 and we're 10 wide. Pretty amazing. Pretty amazing. Looked like we might have a chance for an outside day up if we were able to take out the high and close above it. Never got there. F spiked up, got rejected. We tried again in J, K, and M, but can never get close to it. Volume 241 million, above average, which is 228 million, but nowhere near the 300 million we've been doing on the downside. I would figure we're going to do about 250, 255 with the after hours. As far as my trading today, I did 4 trades. I got long the ETF in B period when we got to value low, and I'm talking small, 100 shares, added on around the opening, added more down at M's low, and then when we took out A's low from yesterday and came right back in, started trading right back into M period, I got long a decent amount. Now, I was able to do that because I was playing with the ETF. I was only long about 600-700 shares, and yes, I was out money, but if those were options where I started buying them, I would have been getting crushed, even if it was only 10 or 20 lots, because those things move now $1 a clip. But here, I was out maybe a couple of grand as opposed to 10,000 or more on the options, which gave me the ability to hold on and add once I realized that this trade would be okay when we came back into A range and M's range. Took it back up, had a decent trade on it. Took a short in G. So F period spiked pretty good, but gave it all up real quick. Okay? When G got up to E's high again, took a short, looking for it to stop the one-time framing up. Remember, G and H are pretty good candidates to stop one-time framing either up or down throughout the day a lot. Keep an eye on that. And that's exactly what we did. Stopped the one-time framing up, came down, covered it right at A's high. Here's where I got myself in trouble. It was a great cover, and I was looking for an afternoon pullback low. G pulled back up pretty quickly again. And I showed no patience whatsoever, thinking this was the afternoon pullback low. I started buying, and this time I bought calls, which, like I just told you, can get you in a lot of trouble. I only bought 10 of them, but by the time I knew and buy it in G, once H started and it went down, took out G's low, I bought more here, and I bought more here again, right above the opening. And again, I was out pretty good. I was looking for an afternoon pullback low. That turned out to be it. But my entry was absolutely horrible. Even if this was the afternoon pullback low in G, to buy it up here because I was afraid of missing it in this type of market is absolutely silly because you're going to have plenty of opportunities. So, yes, I did okay on the trade. I ended up basically breaking even when it finally came up because I was out a decent amount. But the thing is, if I had waited and showed some patience and got in, even if I started my entry at G's low and H's low as opposed to up here, my risk reward would have been a lot better when it did go back up. So I called the market correctly, but I executed it horribly on that trade because I was looking for the afternoon pullback low and we got it to the T. So I ended up breaking even on that one. And then in M period, I took a long. Took the long. I was waiting for it. Now, another thing I talked about yesterday, a lot of times M period comes back to where it opens. It never did that. But once we took out L's high, now we were one-time framing down right after L. If M never took out L's high, I would have looked for a short back to where we opened. As soon as M took out L's high, everything changes in M period. And now I was looking for longs. We traded all the way up. I didn't do anything. I showed patience. It came back down. And before the 350 algorithm, which usually shows some kind of good life, and on a day like today when we're up, the odds are it's going to go up. So when we pushed down right before the algo, I bought it. 350 came, got out of it on a nice pop, like 40 cents I made on that option. Had a chance to do it a couple of times. It actually came in pretty good before the 355, but I didn't do it again. So that was my day trading. As far as destinations, again, far and wide apart. So price is going to be seeking its level. We closed at 252.80. My first destination on the upside will be today's high of 256.17. So over $3 away. Then 256.90, yesterday's high. 257.10, 11 wide from March 13th. And then if we're able to get that, we don't have anything to 271.08, which was a daily high. So, and again, we would probably use A's high as some kind of point to keep an eye on, because that's where the price probe was from that day that got totally rejected. For the downside, your first destination will be 10 wide at 250.34. So $2.50 away from where we close. Then we're going to use the afternoon pullback low of 245.05 from H period, and then today's low of 237.07. So another $8 below that. So again, if we open in balance in value tomorrow, you're going to get some major league chop. Let's look at the charts. Monthly. Still one time framing down. Still have not taken out December of 18's low. Question is, are we going to do it? Or getting close enough? Is that going to be what the sellers wanted to do? 237.07 is our low, 233.76. So a little over $3 away from it. Weekly, we're down. We're one time framing down. This is week 4. Same thing, never took out that weekly low, which is December of 18's monthly low also. Now here's the one that's going to have to take the baby steps we always talk about, right? It's the daily. Now, look at the last 8 days of trading, right? I mean, we could look at the whole thing. Once we came down, right? We balanced 3 days, came out of it to the downside. We balanced 5 days or 6 days, came out of it again to the downside. But these last 8 days, to me, let's see if we could reverse the trend. So we had a gap down, balance for 3 days. That was the day we came back into it. I thought things were okay. Boy, was I wrong, as we gapped lower the next day. However, we closed that gap 2 days later, and we had a 2-day balance. Then we gapped lower again yesterday. Filled that gap. And today, but we closed way below it, right? We filled the gap, but closed way below those 2 lows. Today, took out yesterday's low, almost took out today's high, but didn't. But we did close inside of Thursday and Friday's range. So even though I'm calling it down because we're one time framing down, I'm going to call it down to balance. Very important here, right? If we take out, if we're able to stop the one time framing down and take out today's high on tomorrow, the next 2 daily highs should fall fairly easily, right? I'm sorry, the next Monday's high should fall easily. And remember what I just told you. We have nothing to 271.08, which is this daily high. So if the buyers continue what they started today, until we get more market-generated information, once we take out these 2 daily highs, they're going to have a free ride, basically, to the high of March 13th, Friday the 13th. So that's very important. But until we start one time framing down, it means nothing. We're still down to balance. So that's the goal for the buyers tomorrow. Hope you had a good day trading. Have a great night, and we'll speak prior to the opening tomorrow.